way to communicate. Like when you think you're sharing your screen and it's not being shared.
Yeah.
Maybe I'll do like some baseball move or something. You know what I mean?
Some baseball moves, yeah. Throw some signals.
Yo, screen.
Yeah. You guys, we got to help each other out too, because sometimes I'll be forgetting to share my screen the proper way, and I'll just be random cooking. I did that a couple times the last Zoom or the last live call. But yeah, Mr. Man, how was your trip, bro? You've been out for a minute. You were like gone
Yeah,
the pretty much majority of the month of August, huh?
it was beautiful, man. Like to be able to be free and just live my life out there. My wife and I, we were living up in a tent at my buddy's property in Cape Breton on the east coast of Canada here. And while we were out there, so they own 60 acres of land, and they can develop the 60 acres and do whatever they want, but they figured, okay, well, we'll develop a small portion of it, and what better than to have the people that you love you. So they own 10 acres of land as well, so we decided we're going to build out there and head out east in about 2 years time.
Heck yeah, man. That's dope, dude. Yeah. I mean,
Mhm.
I think that everybody's innate ability to tap into nature when they can is extremely, you know, you should do it. I don't think a lot of people, well, actually, I do think a lot of people have lost their connection with nature because we're so intrinsically inclined to this digital native, uh,
Mhm.
ecosystem that we're involved in. Even if you're not involved in the digital transformation, you're still like watching Netflix, watching Hulu on your cell phone, scrolling, or you're at work on your phone, whatever. So detaching yourself from that is
You know what? I won't
man.
even lie. When we first started the trip, I had a hard time not being able to like chat with people on here, research, post to Twitter, anything, because I might be in reception, I may not be in reception. Then eventually, after that like lead period or that lapse time, it felt okay to let go and just to live my life out there. I was able to research every now and again and post when I could. And now that I'm back again, I feel like it's 100. Let's do this again. And it's like I gotta just take it slow still, you know?
Yeah, I like what XRP Slave just said in the comments about how we should go outside for 10 to 20 minutes and walk around barefoot and whatnot and resonate with the earth's electricity. I
Hmm.
agree with that, man. I think a lot of people have lost touch with who we are as human beings and our innate ability to connect to this world on a different levels, both spiritually and physically. And it's sad, man. It's so sad to see that these technological advancements in which we have in our possession right now, not a lot of people are using them to their benefit, and instead they're utilizing them in such a way where it's like literally deteriorating their mental capability, their mental health. I mean, it's we're for real living in a matrix. Like I don't understand how people don't see it. You
Yeah,
know?
that's real. I mean, bro, going outside and getting grounded is so important. I don't know. Did you guys ever peep that video? It went viral on TikTok. It was this guy who basically proved how important it was to be outside and grounding with the earth. And this gentleman had cancer, right? But he wanted to sleep on the ground and take in those negative ions. So he came up with some creative way to basically, he took a copper wire and went out
Hmm.
his window and put it into the actual earth and hooked it up to the frame of his bed. And he said his sleep was night and day difference. And I don't know, you got to check out the story. I don't know. I don't know if the guy has cancer anymore, but it was a pretty interesting story. It went viral all over TikTok. And I was like, yo, it's mad important to be outside and one with the planet, you know? So
That's it.
Yeah. Go ahead,
I didn't hear
Mr. Man.
about that state, but I mean, in terms of connecting and grounding, I want to say a few months back, I got my wife a grounding pillowcase because she heard how grounding can be profound for us. Just be able to tap in and connect with the or eliminate the energy that we tap into all day and just kind of ground it and expel that from our system itself.
No, 100%, man. Yeah. I mean, I look forward to the day where I don't have to be connected to the internet to make money, and I can kind of just attach. I can kind of um, connect with what you said about feeling sometimes like when you go to disconnect, you feel still intrinsically attached to the internet. I feel like sometimes when I take a break, like I'm gonna miss something, or like I'm gonna miss out on updating my community about something, or it's it's weird, man. It's weird how it's been built into our lives and fabricated into our everyday existence in such a way where people become dependent on it. And but at the same time, people become dependent on it, and more so in a negative way than in a positive way, which is unfortunate. I personally utilize the internet to benefit not only myself, but my business, my friend group, my circle, my community, myself financially, spiritually, and mentally. And a lot of people don't do that. They use the internet to just scroll aimlessly and fill their brain with useless information and talk shit to people. And that's garbage. You know, that's not what the internet was created for. The internet was created to move information at the speed of light. Um, and not a lot of people are using it for that, man. So it's just, you know, it is what it is though.
That's real.
Um, so yeah, we got almost 300 people tapping into the call today. So really do appreciate each and every single one of you guys for tapping in. We got Mr. Man and Mr. Aqua on the call today. Mr. Man came back from his little vacation, so it's good to have you back, bro. I'm going to start off the call today by just really cooking and rapping about the markets in the current environment. As an investor and as a trader in this space that is actively profitable, I'm really sick and tired of seeing all the miscommunication, misunderstanding, and just misinformation amongst retail investors in this space that are just distracting people and leading them astray and misguiding them. And I don't want any of my followers or any of these two gentlemen's followers on the Twitter and YouTube space to be the type of people that are distracted by the idiots in the crypto community that have no idea why prices fluctuate. For example, I know off the top of my head, without even looking at the markets right now, that the crypto market cap is below $1.9 trillion. It probably lost over $45 billion worth of value today alone. And that is not for some random reason. And it is sure as hell not because of the fundamentals that I'm going to share with you all to start off this call. So my purpose here throughout the entirety of my spiel real fast is to enlighten those of you all who are seriously looking to get educated about the market movements, why we're seeing sell pressure in crypto right now, and why all of the bullish moonboy targets that you've been led to believe are going to come into fruition last month, the month before that, and all the months before that have not happened yet. And so if that sounds like something that you want to learn deep, deeper perspective on, stick around for the entirety of my segment of this breakdown, because I really want to get that point across to people so you can not only see that this is easy information to come across, but that the vast amount of individuals are not paying attention to this. And it is the number one reason, and why, my personal opinion, most crypto influencers and crypto investors lose in this space is because they have no freaking idea what they're getting themselves into. I don't understand why people or investors in general would get involved into a market, whether it's stocks, crypto, commodities, bonds, whatever floats your interest, to make money and not actively try to learn and educate yourself on it. And that's the number one problem with crypto, is you have all these influencers in an internet age that can come in and read documents to you and read fundamentals to you and sound educated by making bullish price predictions, sparking your dopamine, right? But they aren't actually educated on the subject matter at hand. They don't actually know what drives volume and volatility to this market, and they make shit up. And you all read that shit, that garbage that they present on the internet, because they have hundreds of thousands of followers. You think that they are important, or you think that their opinion or whatever they're discussing or talking about actually matters, when in reality it doesn't, right? So I'm going to attempt to kind of shed some light as to why the crypto market is down. I'm done my spiel, but I'm always in an attempt to educate and spread valuable information. And individuals that are embedded into my community know that. And individuals that follow me on the outside that pay attention to the things and the information that I post also know that. So let's jump in. Mr. Man and Mr. Aqua, I do apologize because it's going to take just a quick second. But then after that, I know Mr. Aqua has some video clips he wants to share. And then we'll let Mr. Man share any good valuable information he wants to communicate with you guys today. So I want to start off with this, because this And these types of posts on the internet literally make me laugh out loud. Not only because I see the amount of impressions and views that these types of posts get, because the vast amount of people, like I mentioned, are distracted, but the fact that people actually think that these types of fundamentals move market prices. It is literally comical when I see stuff like this. And if you think that these are the types of fundamentals that move prices, you are delusional and you've been following the wrong people, and you need to stop, because you're going to constantly you're going to get wrecked. You're going to get led in the wrong direction. You're not going to know when's a good time to dollar cost average in, when's a good time to sell your positions, so on and so forth. And you're going to be following people that have hundreds of thousands of followers that never put out valuable information, and you don't want to be that type of person. So this from Watcher Guru: Justin, Ripple co-founder and executive chairman Chris Larson endorses Kamala Harris for president. This has 1 million views. Okay. And if we head over here to a retail fundamental website called FX Street, you can see that they will go out, whoever this person is, Ekta Mora, I don't know who this author is, but they'll write fundamental pieces like this: XRP dips to a 1-month low to 53 cents as Ripple co-founder backs Kamala Harris for US presidential elections. And people will read these headlines and really think, intrinsically believe that that is why XRP is not performing well. You are an absolute delusional person if you think that this has anything to do with why XRP or the rest of the cryptocurrency market is selling off right now. Do you really think family offices, private wealth managers, asset managers, hedge funds, institutions give a shit about Chris Larson's political perspective? Absolutely not. Absolutely not. They do not care. Okay. And so let's just go back in time, and I want to show you all and really educate you all on why we're seeing sell pressure on riskier assets like crypto, and show you all that not only in the Cyberx community were we talking about this, but we predict this months in advance, not driving any fear, uncertainty, or doubt in the market, just real logical technical analysis based off of fundamental factors that either drive inflow or outflow of risk assets like crypto. So if we go back a month ago, just showing you guys, I'm going to mute Mr. Man real quick because I think he's got some background noise. This is from August 5th, just to show you guys I'm not making this up. What weighed on crypto heavily about a month ago at the end of July rolling into August? It was 2 primary factors. We had recessionary fears escalate amongst market participants, and we had the yen carry trade. And fast forward to today, I'm going to show you all how those 2 primary factors are still weighing heavily on risk sentiment, where investors that have much more money than you and I that actually control the price fluctuations of this market are refraining from taking aggressive bullish bets, because those 2 factors are still being focused on in the current market sentiment. So just to show you guys I'm not making this up, this is from a month ago, August 5th, 2024. Crypto plunges amid recessionary fears and market sell-off. Bitcoin and Ether plummeted to multi-month lows as concerns over potential U.S. recessions and weak economic data rattled financial markets. Then we also had the yen carry trade. This is also from August 5th. However, the yen carry trade really unfolded on the 31st of July, and I'll show you guys that in just 1 second. But we see investors are unwinding the biggest carry trade the world has ever freaking seen. Highlight, right? That is massively important. Why would you not want to pay attention to this? This is something that has not happened since 2007, over a decade, right, of time. And I'm going to show you guys why this is so important. We're going to break this down. Rapid unloading of carry trades extended on Monday. Remember, this is back from the beginning of August, with market participants seeking to roll back on popular trading strategies amid dramatic global sell-offs in risk assets, keeping in mind that cryptocurrency is seen from a financial institutional perspective as the most risky asset class on the face of this planet right now. So crypto falls in line with that category of risk assets. Then we also have this one from August 9th. Carry trade impact on world markets. On Monday, global equities and digital assets underwent a dramatic sell-off as the unwinding of the Japanese yen carry trade rattled markets. So keep in mind, as we rolled over into August, on the 31st of July, the Bank of Japan hiked rates, right? Where we can see here, this is from the 31st of July, 2024. Japan hikes interest rates for the second time since 2007. That is massive. And it rattled crypto and stock markets across the globe. We saw sell-offs at an unprecedented scale. Crypto went from $2.4 trillion all the way down in August to $1.7 trillion. And we're still seeing today those same factors that weighed on risk assets at the beginning of August unfolding in the markets today. Here you can see this is an updated fundamental piece from September 6, 2024. The Fed official Gooseby says that the odds of a recession might be rising. So we're still seeing those recessionary fears linger in the markets, which again keeps larger investors than you and I hesitant from taking aggressive bullish bets. Then at the same time, here's another fundamental report from mid-August, August 19th, 2024. Attention, Bitcoin traders, the Japanese yen is strengthening again. Keeping in mind that the strengthening of the Japanese yen at the end of August, or sorry, excuse me, at the end of July, beginning of August, weighed heavily on crypto. Okay. Here is a fundamental video breakdown from 3 months ago from within inside the private CyberX community, where we told individuals that this was going to happen, that we were not going to supersede the March highs at $2.7 trillion and that we were going to start to pull back down into the yearly lows at a roughly around $1.8 to $1.7 trillion in crypto, just to show you guys that we're putting our money where our mouth is at. We're not calling out fear, uncertainty, and doubt, trying to get you guys to sell your positions or anything like that. We're trying to actively teach you all what is happening in the market. So let me show you guys what I'm talking about. Like I mentioned, most crypto investors will go and they'll read these dumbass news articles like this, and they'll be like, oh my gosh, Chris Larson supporting Kamala Harris? That's why my XRP isn't performing well? And you're dead wrong. Don't think like that. That is the dumbest excuse as to why crypto is doing what it's doing today. Let me show you what I'm talking about, okay? Here's the XRP price charts. And like I mentioned, looking at this fundamental piece, the Japanese central bank, Bank of Japan, hiked interest rates on the 31st of July, 2024. If we head over to the XRP price charts and we look at the candlestick on the date of July 31st, 2024, here you can see XRP topped out at 60, almost 66 cents. Here's the fundamental, right? We can see the negative implication that that had on the digital asset XRP. XRP, just like the rest of the total cryptocurrency market cap on the same exact day, dropped from 65 cents all the way down to roughly about 43 cents. If we go look at the total cryptocurrency market cap on the same exact day, July 31st, look down at the bottom of my charts, you can see the total cryptocurrency market cap went from $2.4 trillion all the way down to 1.7. If we go look at the yen, following the yen basket, this is the strength of the Japanese yen. And we go look at the same exact date of the fundamental, July 31st, 2024, and we go look at the date at the bottom of the charts when the central bank of Japan hiked interest rates for the second freaking time since 2007. What happened? The strength of the Japanese yen increased significantly, and the yen carry trade unwind started to rapidly unfold, where investors started to rapidly sell riskier assets like stocks and crypto and started to buy the Japanese yen. The same thing in most recent times has just started to unfold, where you can see here, yet again, the Japanese yen is significantly increasing in strength, and investors are hesitating to take aggressive bullish bets in risk assets like crypto and stocks. I don't even trade the stock market, but I can guarantee that the S&P 500 or some odd whatever equities is down today. Guarantee it. Because we're seeing a higher inflow into safer haven assets like the Swiss franc, like the dollar today increased in strength, like the Japanese yen. So investor appetite is still lingering in fiat currency, i.e. safer haven assets, because of these lingering recessionary fears, because of the interest rate hikes that are on the forefront or on the table still from the Bank of Japan, right? And so you need to understand that these are the factors that are weighing on risk assets, not political perspectives of these co-founders and CEOs of these major blockchain companies. No, like hedge funds, I guarantee you if you go to a hedge fund or an asset manager or a family office and you present them this fundamental and you say, hey, are you guys selling your digital assets because of this? They would literally laugh at you and tell you to leave their organization as fast as possible. Okay. Guarantee you. They look at you like you have freaking a third eye on your forehead. Right. So I want to break this down for you guys. And we give these types of fundamental reports and updates to our private community members so that way they know what is actively going on. For example, here's a copy of our private report today where we broke this down intrinsically for our private members, explaining why crypto is at $1.8 trillion, why we lost $48 billion today, right? Keeping them in the loop with what's actually happening in the market and not this bullcrap. So if we go look at some updated fundamentals, we can see this is from Bloomberg. This is from September 3rd, so just a couple days ago. Ueda reiterates, that's a Japanese central bank representative, that the Bank of Japan will lift rates if the outlook is realized. This is a hawkish comment from central bank representatives of the Bank of Japan, right? So again, what's this do? This drives more strength for the Japanese yen and further supports the possibility of the yen carry trade unwinding even further. If we go over here, FX Street, look at this. This is from the 6th of September, today, 2024. Further unwinding of the carry trade. The unwinding of the carry trade in the FX markets continues, with major safe havens returning to the extreme scene against the dollar in early August. Keep in mind, I just showed you guys fundamental reports, how the same fundamental, the yen carry trade unwinding, negatively affected risk assets at the beginning of the month. The same fundamental factors are still weighing on risk assets across the board. Yet because of these manipulative articles, people will think that because of freaking Chris Larson's political perspective, your XRP is not performing well. So what does this do? This allows for these manipulated influencers that have no idea how markets move, that have a large following, to get online and say, oh, XRP CEOs or Ripple CEOs and co-founders are dumping on you retail traders. Tell me I'm wrong. Tell me that you are not seeing those types of tweets right now. Oh, they're just Ripple's just bagging on y'all. Retail traders, they're just selling and dumping on you guys. No, that is not what's happening, people. Larger investors with much more money than you and I that actually move these markets are hesitant from taking aggressive bullish bets because the risk sentiment right now in the digital asset landscape and in equities markets is risk off due to some of the factors, not all, but some of the factors that I'm showing you today. Primarily recessionary fears and an increased appetite for safe haven assets like the Japanese yen. Where if you go look at the strength of the Japanese yen today against other major currencies, this week alone, the Japanese yen increased in value over 8% from Monday's low to where we currently sit today. That is a significant increase in strength in this currency. Okay. And what I'm trying to get you to see is that the vast amount of individuals that are in the retail space, they're not reading these fundamentals. They're not going through what it actually takes to become profitable in this market, to know what creates inflow and outflow of risk assets. Because again, they only got into this space to make money. They did not get into this space to understand the markets in which they are involved in. And that is why, to full circle, most people don't make money in retail, because they get in hoping to make money, thinking that it's easy, but it's not. You have to study the markets in which you are operating in. So here is a fundamental piece just to show you guys that there are retail articles that talk to you guys about this stuff. This is from September 3rd, 2024. Bitcoin falls alongside stocks following the Bank of Japan's rate hike comments, like I just mentioned. According to Bloomberg, the market also fell on Tuesday. This is from September 3rd, as the Bank of Japan hinted at more interest rate hikes. In a document submitted to a government panel chaired by outgoing Prime Minister Kushida, bank governor, because I'm going to butcher these names, Governor Ueda explained the central bank's policy decision in July, reiterating that the regulator will continue to raise interest rates if the economy and prices performs as expected. This reminded market participants, look at this highlight right here, when the Bank of Japan raised the benchmark borrowing rate in July, triggering an unwinding of the yen carry trade and destabilizing risk assets, including Bitcoin. And what did I just show you guys? That those same exact fundamentals, as of time of recording this video on the 6th, are still weighing on risk sentiment. The markets do not give a F about political perspectives from these co-founders and CEOs. Stop thinking that these CEOs and co-founders are dumping on you because these ignorant retail articles that are written by these uneducated people are telling you so. And instead, attempt to do your research on what actually moves the value of these digital assets. So with that being said, my last spiel that I'll go over is explaining to you guys in detail via a fundamental report why the risk carry trade or the yen carry trade weighs on risk assets. Okay. So let's break this down. This is a fundamental report that we typed out on the 5th of August. So over a month ago. Keep in mind, I'm just trying to show you guys that we're actively keeping our community engaged. Remember when all these fundamentals were coming out, telling you all that risk assets were bearish, and the vast amount of influencers on the internet, I know you all saw this, were like, what the heck is going on? Why is crypto crashing? Fuck crypto. Everybody sell. Get out. What's going on? They had no idea why the markets were selling. Here at CyberX, we were at the forefront and we called for this months in advance. Keep in mind, this is from May 23rd, 2024, when we called this pullback. We didn't call for a crash. We called for a correction, and it's now unfolding, and we know why, right? So we're not in panic mode. Nobody in CyberX is in panic mode. No, we were not buying months ago when the market was rallying. Now that the market's discounted, we are taking advantage of discounted opportunities, right? So let's just go through this. Let's go through this quick overview. This will take another 5 minutes, and then I'll pass the torch over to these two gentlemen here. So yen carry trade and the yen strength. Keep in mind, remember, this is back from the 5th of August. And if we go up here, we mentioned some fundamental factors weighing on risk assets. We said number one, the yen carry trade and the yen strength. Number two was global recessionary fears. And number three, back at the beginning of August, was Middle East tensions and escalations, which as of time of recording this, have slightly dwindled and withered away. They're still on the forefront and still need to be paid attention to, but they're not as heavy weighing on the markets as they were back at the beginning of August. So our primary focus is going to be the yen carry trade, global recessionary fears, and right now I'm just going to break down the yen carry trade and why this negatively affects risk assets. So pay attention, okay? Because you can say the yen carry trade affects risk assets, but then if you don't understand why it does and why there's more demand for the yen and not risk assets, then you don't understand it. And you're just saying something. For example, like in DeFi, people say, oh, I don't want to get involved in DeFi because I don't want to experience impermanent loss, when they don't even understand the terminology impermanent loss without going into detail. Okay, so don't be that type of person. Understand the vocabulary that you're transmitting out into the universe. So the Bank of Japan's monetary policy update, keep in mind, was on the 31st of July. And what you have to understand is that these large financial institutions, what are they in search of all the time? Yield, 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 all caps yield. They want to know where they can house their liquidity, their capital, their cash, and earn yield on it. Now, in a low interest rate environment, that tends to be in riskier assets that appreciate against fiat currencies that aren't performing well, like crypto and stocks that tend to appreciate in value in a lower interest rate environment. In a higher interest rate environment, they tend to house their capital in fiat currencies in whatever central bank domestic currency that's earning higher interest rates, because their goal as traditional investors is to earn consistent yield. Okay. And so think about it. If the Bank of Japan, for the first time in years, is starting to hike rates, what are they going to do? They're going to get a higher rate of return, having their cash, their capital, their liquidity in yen. Okay, just to keep it simple. So Bank of Japan's monetary policy update was on the 31st of July. Interest rate hikes. The Bank of Japan increased interest rates from 0.1% to 0.25%. The reduction in bond purchases. The Bank of Japan committed to halving its monthly bond purchases from 6 trillion to 2.9 trillion by 2026. The reason why I'm getting you guys to see this is because everybody thought that the bull market was going to happen this year, when in reality, the global environment, which is out of all of our control, isn't really calling for that. Yes, regulatory implications are coming into fruition. Yes, there's bullish fundamentals happening every single day in blockchain and the crypto space. Developments are unfolding at a rapid pace. And yes, I firmly believe that trillions of dollars are going to flood in. But we have to be realistic on when all of this is going to take place. And there has to be a risk on market environment for that to unfold, for investors with much more money than you and I to increase their appetite in risk assets and drive money into this market. And that's not the environment right now in which we operate, which is why your assets are not performing well, which is why crypto is at 1.8 trillion. And until you understand that, you're going to constantly try to fight the markets and hope, like the rest of these retail idiots, that the market's just going to go up. And that's not how crypto works. Okay. So anyways, let's continue. So implications of the yen carry trade. The carry trade impact. The yen strengthening significantly affects global liquidity due to the unwinding of carry trades. Investors who borrowed in the low yielding yen to invest in higher yielding currencies are now rushing to unwind these trades. So, for years and years and years, people were borrowing the yen to buy up riskier assets like Japanese stocks, stocks globally, whether that was in the US stock market or cryptocurrencies, which is a global market. And now that that sentiment has shifted and they could possibly get a higher interest rate on their yen, they're rapidly selling, you get what I'm saying? Their stocks and their crypto and buying up yen. It's unwinding the trades, the borrowing that they've been doing against the yen for the past years, like it mentioned in the previous article since 2007. Okay. Global liquidity source. The yen has been a major source of global liquidity. Major market players have shorted the yen. That means they've been selling the yen or borrowed against it and used the funds to invest long. That means buy risk assets globally. As the yen rallies, massive short positions against it are being closed out. This drives the yen higher, forcing further liquidations of short positions, creating a self reinforcing cycle. By tightening its monetary policy, the Bank of Japan has triggered a cascade of effects, particularly impacting the carry trade, which in turn affects global liquidity and financial markets. So let's break this down so that way you understand this in detail. The Bank of Japan hikes rates. We went over that. We need to go over and understand a hawkish move. So if you don't understand the terminology hawkish and dovish, a hawkish perspective, which I just showed you guys, the Bank of Japan, according to this Bloomberg article and some of the comments from the Bank of Japan representatives have had, means what? A hawkish stance means that the central bank is focusing on tightening monetary policy to control inflation, which often includes raising interest rates and reducing asset purchases. The impact that this has on the yen. As a result, the Bank of Japan's actions, the yen strengthened. So let's understand this more. A strategy where investors borrow money in a currency with low interest rates is called a carry trade, like the yen. And they invest in assets denominated in the currencies with higher interest rates or higher yielding assets like stocks and crypto to earn return on the interest rate differential. The yen has been a major source of global liquidity due to its low borrowing costs, which now are starting to change. Okay. Why this causes a massive sell-off in risk assets. This is the last piece here. So when the Japanese central bank raises interest rates, the differential between the yen and other currencies like the dollar narrows. This makes borrowing the yen less attractive because the cost of borrowing increases. As the yen strengthens, the value of borrowed yen increases. Investors who have borrowed in yen now face higher costs when they convert to other currencies back to yen to repay their loans. Investors then start to unwind their carry trades by selling off risk assets such as cryptocurrencies and stocks to repay their yen denominated loans. This has sparked now a vicious cycle. So as the yen continues to strengthen, more investors are still unwinding their positions, and it creates a cycle where the yen will continue to rally. This further enforces that more investors are set to liquidate their positions, leading to more selling of risk assets, which we can clearly see as of today is still happening. The yen is strong, and it literally negatively correlates with the total cryptocurrency market to show you I'm not making this up. So let's just look at what I'm talking about. Okay. Here's July 31st when the total cryptocurrency market cap started selling off. You go look at the yen. When did the yen start increasing in strength? July 31st. If we go back here on August 16th, when the yen again started to increase in value, you go look at the total cryptocurrency market cap back in August. Here in this area, what started to happen? Investors were buying, liquidating highs from early sellers, and then boom, the yen started to increase in value, and investors started to yet again sell their riskier assets, which now leads us to where we currently are now. The total cryptocurrency market cap with all these bullish moon boys on the internet telling you all that your digital assets, particularly like XRP, are going to skyrocket in value, when in reality, that's not happening this week. It's not happening next week, most likely. And it's most likely not going to happen the week after until this environment, like global recessionary fears and the yen carry trade unwinding, start to cease to exist and the market sentiment surrounding risk assets starts to improve, on a global scale. Now, again, when that's going to unfold, we can't put our finger on that. We're not crystal ball predictionists. We're market analysts. And so as the data comes out week after week after week, we have to be able to determine and base an opinion around that specific data, right? So we need to remain data dependent, forward looking, hopeful, taking advantage of discounted opportunities, not buying in the rallies, and instead buying in the discounts. So now that prices are discounted yet again, I'll be sending dollar cost average opportunities out to my private community that I'm personally looking at, showing these individuals that are inside our private community that now that everybody else is fearful, now that everybody else thinks that crypto executives like Ripple CEOs and co-founders are selling on you, is when you should be buying, not when you should be selling. To full circle my spiel. And this is how you become profitable in the market, by understanding what the market is doing and why it's doing it, not just being delusional and thinking that the markets actually care about stupid fundamentals like this. So anyways, I hope that that spiel helped clear some air as to why your portfolio most likely right now is in the red. A lot of people will knock this stuff, and a lot of people will say, oh, this stuff is not important. You shouldn't pay attention to this. If you want to listen to those types of idiots on the internet, then be my guest, and we will continue to outperform you in our portfolios here at CyberX. I can guarantee you that. Because when you pay attention to this stuff, you actually start to time markets correctly, which is possible. And you actually start to know when's a good time to dollar cost average in if you're a dollar cost averager, and when's a good time to take profit, right? To grow your bags and really tap into the markets in which you're operating in. So hopefully this helped you guys out. I'm done my spiel. I'll pass the torch back to Mr. Aqua and Mr. Man.
Yeah, I love the spiel, bro. Great spiel. Yeah, it's wild people adopt this opinion right here. I mean, just look at Rosie Rios, and she's a Democratic Party member. She was the treasurer, the entire time Obama was in the White House. And it's just like, I don't know, like politics have nothing to do, and you just proved it. So I don't know if Mr. Man has something to say too. I think I was speaking over him right now, but
I do have something to add to that in terms of, you were talking about the Japanese yen being cyclical, as well as there are large players in this space that actually have money to move markets. I want to share my screen for a quick minute here. It's a snippet of Chris Giancarlo speaking. And in this snippet here, he actually unveils that banks are tapping into digital assets. So if banks are tapping into digital assets, they have the potential and the ability to move markets, as you had just described there, due to the strength of dollars in our real world. So is the screen shared? I don't even know. There
Yeah, it should be. And just to make things clear real quick before you play the video, I don't want people to think that political perspectives and the sway of the market between political perspectives doesn't have an effect, because it does to some degree. But you have to keep in mind that there is a multitude of things, of factors, that either positively or negatively affect risk assets. And when you see fundamentals like this, where it's like trying to fixate your attention on one thing negatively affecting risk assets. For example, the article that I shared where the lady wrote an article about how the co-founder of Ripple supporting Kamala Harris is weighing on the price of XRP. That is the most illogical thing to think, right? Instead, zoom out a little bit further. And if you start to just pay attention to what these central bankers and these larger institutions, like if you go on LinkedIn, I'll just give you guys a little hint. If you think I learned this information by being tapped into information that you guys can't tap into, you're dead wrong. If you go over to LinkedIn, you can go and you can read these economic reports from these large banks that are involved in digital assets right now, like Citi, like JP Morgan, like BlackRock. They literally type out weekly reports, daily reports via their economists that tell you about these things. But again, people just don't tap into them. They don't read them, right? So anyways.
So for all you guys who don't know, Chris Giancarlo, former chairman of CFTC, also known as Crypto Dad, listen to what he has to say.
We did was the first in the world. So anyway, long story, when I left the commission, I'm convinced this is the technology of the future. This is the internet doing to banking and finance and money itself what it's already done to social networking and information gathering and entertainment and leisure and retail shopping. It's changing everything, and it's making all of those activities 24/7, 365 disintermediated activities. This is going to change everything we know about finance. And what's going to happen is the large banks, which already are kind of quietly devoting huge resources to this, with a few breakthroughs, all of a sudden the middle tier, the next tier banks are all going to have to do this, but they're not going to build it themselves. They're going to look around and say, what's the industrial grade solution for this that works, that delivers all the needs we have for privacy built into it, but it's interoperable with all of our peers.
So it's interesting to think that to be able to support this new digital world that's coming in here while supporting the old world, huge capital needs to leave the old world and go into that new world that Chris had described with the Japanese yen, when loans are coming due and they have to sell off their assets so they can funnel money back into the market again with the strength of the dollar there. I mean, you can see who is selling and who is buying. I know I woke up this morning and went on Twitter, and one of the first headlines I had seen from reputable or big names in the space, I could say influencers, always, I see it every single time without fail. Who's selling XRP? Who's selling XRP? And I'm sure you guys have seen it as well. I mean, just think.
Of course.
Yeah, but when you think logically about it, I mean, you can see who the market makers are, who moves the market. We are just simply the retail market, and we are here to capitalize on it. We don't move markets, unfortunately.
You know what else I think is hilarious is you see those influencers and those YouTubers that are continuously telling you all that the dollar is going to die, or that it's going to go away, or that it's going to fall off. Now, I'm not knocking the depreciation of the dollar or the strength of the dollar over time. Clear as day, that's obviously happening or going on. But for anybody in their right mind to think that the dollar itself is going to disappear is completely delusional. How on earth are people in the United States going to pay for goods and services in the United States if the dollar goes away? So for anybody to think that the dollar is going to go away, it, like, when you say that, it speaks that you have a high level of unintellectual capabilities, because you don't even understand how economies work if you think that the dollar, or that the United States is not going to have a domestic currency for US citizens to pay for common goods and services in the United States. Like that sentence itself, or for influencers to even make content where it says the dollar is going to go away, doesn't make sense. Like, it logically does not make sense. Whether, regardless if it's a digital dollar or if it's a physical dollar like cash, the United States is going to need to have some type of said domestic currency for US citizens to exchange and pay for goods and services. Same thing for their domestic purchases. They're going to need some type of currency to trade, right? And so I just, it's just hilarious, man, seeing the lack of education amongst the vast amount of participants in crypto. And it's honestly because we're at such a nascent start of the space, where it's like, what, we're 560 million active users. So the small-minded opinions of all these influencers that have hundreds of thousands of followers that you all tap into on a day-to-day basis comes your way, and you think that it's actually relevant and important, when in reality, you're already part of a small percentage of the population. And so when you tap into these influencers that are misguiding and misleading you, you're tapping into an even smaller percentage of the population that is uneducated. And a vast amount of people in crypto right now that have large influences are uneducated. And that's just a fact. Like Mr. Aqua was saying, if you go and look at crypto Twitter right now, you're going to see people saying, Ripple representatives are dumping on you. They're selling their XRP. You can go look at their freaking wallets publicly. Like, no, they're not. Like, they're not dumping on you, And so it's so interesting to see that people don't understand the flow of money. You would think that people that want to make money would try to understand the flow of money, and they're just not. And it's, again, lacking on their behalf. to become successful in the space. I want to capitalize on what you just said about Christopher John Carlo, about how he mentioned how, you know, banks are coming, and I agree with that. I have a video clip here from about 3 months ago. Let me share my screen. From the co-founder of Chainlink, and he kind of reiterates the same thing. I'll play two video clips from him. This is from the World of Blockchain Summit. This is from 2 months ago, only has 80 views. The first video clip that I'll play is how he talks about how every single financial institution now has a team behind the scenes, whether it's a blockchain, digital asset lead, you know, whatever. They just have people in the banking system working for these banks now to lead them into adopting these digital assets. And 2 years ago, 3 years ago, that did not happen. That was like hard to come by, hard to find. Which just supports Christopher John Carlo's perspective. And then the second thing he mentions, just to reiterate that, yes, we're all assuming that these financial institutions are going to adopt certain blockchains and certain digital assets. Like, I can name off the top of my head what the vast amount of individuals on the internet think those are going to be: XRP, XLM, HBAR, you know, all the utility driven assets, right? But at the end of the day, none of them right now have the ability or the trust behind it to back how much freaking money these financial institutions interact with on a day-to-day basis. And, you know, it's just the truth. If these financial institutions right now, given the infrastructure that is laid out in crypto, onboarded the trillions of dollars that they operate with on a daily basis right now, the market would the floor would literally fall. It would not, the infrastructure right now in crypto would not support it. And that's just a fact. That's going to change over time, but it's not going to happen overnight, right? It's going to take time. And as mature crypto investors, we have to understand that this is not some get rich quick scheme unless you're a trader, right? And you understand how to capitalize on the swings of the market and leverage, right, to capitalize, you know, your capital. If you're a hodler, you should understand the market fluctuations. You shouldn't just be hodling, going to sleep every single night, thinking that tomorrow you're going to become rich, because it's going to mess up your mentality, you know? So just listen to what this dude has to say real quick.
Sector and the buy-side asset management sector participating in the creation and distribution of assets that are not cryptocurrencies, in the sense that I could make a cryptocurrency about a light bulb and it's not related to the light bulb. It's just called light bulb coin, and it's about great ideas, and like we all buy and sell it, and it has like a price that just is arrived at, irrespective of any real world value. That's what many and most cryptocurrencies are. Real world assets are tokens, tokenizations, on-chain tokens. So in that sense, they're similar to cryptocurrencies, but it's dissimilar in the sense that there's an underlying asset. The underlying asset could be a carbon credit, a private equity fund, a piece of real estate, a money market account, treasury, whatever. Everything from core infrastructure, core financial stuff to assets at the edges. This is the big trend now driving institutional adoption of blockchain technology. And they don't call it cryptocurrencies, they call it digital assets. And so this digital assets trend is in a whole other stage now from even 2 years ago, because 2 years ago, you didn't have dedicated teams. Now, most banks have dedicated digital asset team leaders, engineering leaders, product management leaders, and basically those teams are tasked with making progress. Yeah. 2 years ago, you would be working, 3 years ago, you'd be working with people in the innovation group of a bank, yeah, which is primarily tasked with generating experiments. But now you have dedicated teams. Some banks have teams of over 100 people. On the digital asset side, it's exclusively their job to generate these things. This is the thing, I think, this in addition to a few other changes.
Right. So just to cap on what John Carlos said, what Chris John Carlos said, that the ecosystem is changing. It's clear as day, right? Positive developments are unfolding at a rapid pace. We're seeing regulatory clarity come in. It's not solidified yet, but it's coming. Banks are definitely interested. We know that for a fact. And we know that they're laying the foundation. But the money is not there yet. And the money's not there yet because of the risk factor. The risk factor is still too high for these financial institutions. And these financial institutions are risk mitigation masters. Like, I mean, I'm not going to sit here and say they're masters because we know that they mess up from time to time. But if you go into any financial institution, their primary objective is risk mitigation and the security of clients' funds. And obviously, of course, making money, right? They're making money, profit driven organizations. Those three things: risk mitigation, client protection, and making money. And so, making money, you can do that in crypto. Client protection, custody solutions, and whatnot, those things are unfolding now at a rapid pace. The last thing that really needs to be solidified outside of the infrastructure being built, which is being laid right now, and we know that through all these partnerships that we're seeing every single week. You guys see the influencers talk about them. I know you do. It's happening. I'm not knocking that. But the risk environment, the appetite for risk is not there yet. Once that comes back in, alongside of the infrastructure that's being laid right now and the regulatory clarity that's coming and all these partnerships, and once these banks really solidify custody protection and whatnot for clients' funds, I have a firm belief that we're going to see an unprecedented bull market that people aren't even really ready for, you know. And if you're not capitalizing on discounted opportunities right now because you're fearful of the short-term price fluctuations because you don't understand them, and you think that Ripple CEOs and co-founders are dumping on you because you're reading manipulative articles, you're going to get left behind when the liquidity, the wall of liquidity that's being held back by all of these things comes in, and you're going to look back 5 years from now and beat yourself up. That's my opinion.
That's real.
I do want to make one correction there. I don't have anything big to say. Just one correction there. That's not Christian Carlo speaking. That is Sergey Nazarov. He's actually the top guy at Chainlink.
No, this isn't this. Nobody said this was Christian Carlo. I said this was the co-founder of Chainlink.
Oh, well, I did hear you say Christian Carlo. Maybe I was confused with two videos.
What I was saying was this goes hand in hand with what you shared about when Christian Carlo on the video that you shared said that banks are interested.
Gotcha. My bad.
Yeah. But anyways, yeah. But this is the co-founder of Chainlink. It says it right here. And then so I'll play one more thing because just to reiterate what I'm. This is not my opinion. Where he says right here in this video that current blockchains aren't ready yet. Right now, they will be. They're not ready yet to handle all the needs of financial institutions. So let's just listen a little bit further. This is 8 minutes and 50 seconds. And he says, just listen to what he says here.
Are things that people in the Web3 community, I think, don't yet fully appreciate, because it's a very significant, it's basically a different world now in institutional blockchain adoption than it was 2 years ago.
And on this front, right? I mean, obviously, I remember the day where there was a lot of innovation teams in banks who were looking at this. Frankly, a lot of it was window dressing. It was more to create POCs and show that the bank is working on it. And I agree with you. There's been a transition now to the rest of the organization looking at this. What is the biggest challenge when you're speaking to a CTO of a bank or somebody who's running the infrastructure, looking at the infrastructure of the future for a bank? What is the biggest challenge they're having, and how do you think they can be fixed?
So they all kind of go through a pretty similar progression. The progression is, I'm never going to need my own chain. I'm never going to make an asset. I'll just do custody for my clients. Let me go get a custody solution like Fireblocks or something like that, right? Let me go get a custody solution. Then it turns out my competing entities in my space are going to make their own assets. Looks like I can't avoid this. Then they get on this track of, what do I do? The answers there are pretty standard. It's like, I have to choose a chain. Then they go down this like choose a chain rabbit hole. The choose a chain rabbit hole is a really complicated rabbit hole. They have like enterprise blockchains that are being sold to them that don't really perform well. They have Web3 blockchains that are being sold to them that don't meet their compliance needs. And everyone is kind of like trying to get to a golden middle of something that can meet a bank's compliance needs while being relatively performant. On both of those dimensions, current blockchain technology doesn't approach the current levels of what banks need in terms of transactions per second or in terms of privacy and compliance. This is what's really confusing to them. So it's like, I see my counterparts in this other bank, 4 years ago, they adopted a blockchain technology. Now they're killing it. They're replacing it with another one. They replaced it with that. They replaced the one 4 years ago with one they got 2 years ago. And now they're replacing that one with another one. And so there's like this constant use a blockchain, drop a blockchain type of dynamic where they're switching chains. And this is one of their greatest fears, is that they'll make an infrastructure investment in something that doesn't have a future. And there are literally some of these folks that we've talked to, they've invested, like between engineers, the cost, implementation cost, they've invested over $100 million over 4 years in certain blockchain technologies that they're now just like dropping them. They're just like, this blockchain doesn't work for me. It's not EVM, or it's not something, it doesn't do something. I need to switch to another one. So what we do in this situation is we give them.
So I just wanted to play that clip because again, this solidifies from an industry leading perspective. Remember, keep in mind, Chainlink's partnered with Swift, right? Swift is partnered with thousands of financial institutions. So you could assume that this gentleman has been in meetings, closed door meetings with large financial institutions, and he's telling you all that there's a lot of uncertainty as to which blockchains these financial institutions are going to choose and utilize, that they're in the testing phase, but then they'll test a blockchain for a year or two, they'll drop it, they'll switch to another one. There's still a lot of uncertainty as to which ones are going to survive and which ones they're going to use, and they're still just bouncing from chain to chain. No financial institution at the end of the day, according to this gentleman, has solidified which one they're going to choose. Now, I agree with that, to disagree with that, but I'm just attempting to show you guys perspectives as to why you're not seeing this massive flood of liquidity come in yet. This is a perspective from somebody who is embedded into the system behind the scenes, probably has a whole bunch of inside information that is telling you all this to give you a perspective as to why the market cap right now is not sitting at 10 trillion, $20 trillion. It's because there's still uncertainty. Once that environment changes, yeah, we're going to see trillions of dollars come into this space. But right now, this is the current market landscape, right? And so when you understand that, you stop becoming so hopeful that tomorrow your portfolio is going to 10x. You take a step back and you say, okay, wow, this is actually going to take some time, right?
Is there?
So anyway,
have you seen the video? I just want to piggyback this. Have you seen this video right here? Hold on one second, actually.
Let me let you share real quick.
Have you seen this video right here of Danelle Dixon and Jenny Johnson, who is the CEO of Franklin Templeton?
Yeah.
You have seen it?
Yeah, that's a good video. They're talking about regulation. Jenny Johnson pretty much says that regulations will come, right? She says regulations will come and every financial institution will adopt these digital assets. It'll just take time. That's pretty much in a nutshell what she says.
Yeah, pretty much. And then how I came back to this video is because I was on DeFi Llama, and on DeFi Llama on the Stellar blockchain, there's about $430,000 being reported right now under the Franklin Templeton. And I was like, yo, what is that all about? So then I went and I, retouched on this video, and I don't know if you remember this part, but let me just play it briefly. Pretty much they're talking about how real world assets are going to be utilized in DeFi, and we'll be able to borrow against our real world assets amongst other things. And it's just going to get extremely creative in the future. And, for those people who don't know, Franklin Templeton, these guys manage $1.6 trillion. So that's a lot of money. And to be sitting side by side with Danelle Dixon is huge. But where I was just like, whoa, like mind blown was the aspect of DeFi and how it's not just going to be earning yield and borrowing against our digital assets. It's also going to be real world assets as well. But I'll play it for everybody here. It's just like a 3-minute clip here. Let me just play it. And they break down like Rihanna concert tickets. It's pretty wild.
But like, that's the notion. Like, technology should be on that side of it. It should be on the side to keep things low, so that everything else can grow on top of it. So that makes me super happy to hear. It's one of the things we're building other parts of the network with the ecosystem, smart contract layers, all those things, and keeping classic Stellar, and even on the smart contract layer, really watching and maintaining those fees is a really important part of what we want to see. In terms of like what you see next with respect to whether that be Franklin Templeton or other folks out there that you see like leveraging blockchain, not just Stellar, like what do you see happening with this ecosystem? I mean, you've been through a gamut of financial services. So how do you see this?
So I think it's a couple things. First of all, I do think, so today we announced adding Polygon to the, to the Benji ecosystem. And I do think this cross-chain or interoperability is going to be really important. So until that improves, I think that's going to slow some of the progress, right? And I describe it a little bit like, if you were trying to put together an investment portfolio and you had to choose between the New York Stock Exchange and the NASDAQ, you wouldn't be able to pull together a full portfolio. So I think that's something that's going to hold it back a little bit, but it's getting better, right? But I can tell you what we're excited about. One, once we built the system, I mean, we were pretty astonished by how cost effective it really was. We ran 4 transfer agency systems that we had ourselves over the years that we had acquired. And so we understood all of the different, that one was on a mainframe and others were on an AS400 and various things, right? To see how efficient the system is once it's built on the chain where you have the permanent record, got us really excited to say, okay, we can do more. So then we think about, well, what other things can we do? What gets me fired up is not only do I think that it's going to be more efficient, but it's going to open up new types of investment capabilities. And I love to use the example of Rihanna's NFT, where she issued 300 of them. I'm sure she was just dabbling in it.
Yep.
At, $210 each, you get 0.0033% of one of her songs in a royalty. The only way that you could do that is because you have blockchain, which does, 1, it allows a payment mechanism, 2, a smart contract, and 3, that you can prove you own it with the general ledger. And so, imagine 0.0033 is infinitesimal as far as what a payment is. But here somebody can play her song on Spotify. Smart contract says, okay, you have the right to this, and comes in and pays you in your token. That's pretty revolutionary. And so now you think about all the different ways in which you can unlock, and making these things investable and accessible to the average person. So you can imagine Rihanna fans are the ones probably buying this initially.
Yeah, of course.
But imagine if an athlete, he signs a big contract and he wants to sell 10% of, his future earnings. Think of the fans that would love to buy into that. And so, there'll be
So, yeah, I mean, the future is DeFi. I mean, I feel like in the future, we're going to see liquidity pools of your favorite athletes and stuff, and being able to borrow against things that we would have never even imagined.
I got a video clip that goes hand in hand with what she actually 3 video clips that go hand in hand with what those 2 ladies were just talking about. But to agree with you, what you said, bro, DeFi is, I've said this before, XRPL, Stellar, XDC, all these utility driven assets that a lot of ISO enthusiasts have been holding for some time. Vast majority of them have not had a solid DeFi ecosystem, and that is all changing hands for the first time. This next market cycle, regardless if utility kicks in or not, or these assets are used for cross-border payments or whatever, just the DeFi ecosystem alone and the TVL that is going to come on chain for these different ecosystems is going to be exponential because of real world asset tokenization and because of the DeFi the DeFi use cases that are being built in behind the scenes right now. But just to solidify what Danielle Dixon and Jenny Jenkins, right? Is her name?
Jenny Johnson.
Jenny Johnson.
We're talking about. Jenny Jenkins sounds so much cooler. Check this out. So this is from 4 months ago from AIM Summit, 156 views. And this gentleman from, I believe he's from MasterCard, or I can't see the back of the note. It says Master Aversal. I don't know. Anyway, some organization in the Web3 ecosystem. But he says pretty much the same thing, that everything is going to be tokenized in the near future. Listen to what he says here.
Well, Dan, we've previously discussed tokenization of culture. Can you say a little bit about that idea and some of the benefits that tokenization can bring?
Yeah, but I could pick up on what Peter was just talking about. So why haven't tokenized funds really taken off yet? KKR has tokenized a healthcare fund. They're one of a number. Because it's not sexy. And because the crowd that has been most attracted to digital assets normally is under 39. Yeah. And what that crowd, which, panelist earlier today was talking about, he or she who is a Gen Zer, Gen Xer, will become the bulk of the inheritors and the wealth creators. So it's just a matter of time. They are digital natives. And they're passionate about culture. That's what they focus on. And that's why we are focused on where the demand is currently and how we think that's going to influence their decision-making in terms of investing in the future. You don't hear those generations excited about investing in commodities, but they are investing in collectibles. They are investing in experiences. And so the takeaway for those who are assembled here is everything in civilization is going to get tokenized. It's not going to happen this year, probably not next, but over the next 2 decades, everything you can think of, ticketing, vehicle titles and registration,
Dang.
real property. This building will be an NFT, right? Because it's one of a kind. Every piece of real estate is going to be tokenized. And it's going to happen because there are benefits around taking that which is historically illiquid and making it more liquid. But in terms of where consumer demand is today.
Right. So just to touch on what you just said about, Daniel Dixon and Jenny talking about tokenizing tickets for Rihanna concerts and DeFi ecosystems and whatnot. Like, I don't think people really truly understand the opportunity that we have at hand if you just zoom out a little bit and understand that this is not some get rich quick scheme, especially if you're not a day trader or a DeFi investor where you're earning right now, which again should be things that you're taking advantage of in this crypto ecosystem to earn now. So that way you're not manipulated into selling out of your long-term bags, because man, the opportunity for the digital assets that we have and are buying right now at pennies on the dollar is going to be looked at in the future. I mean, I like, if you can't imagine what you just said, everything is going to be tokenized. That's quadrillions of dollars. Now, I don't think that I'm going to be alive, and because I think that's going to be 30, 40, 50 years plus from now where quadrillions of dollars is tokenized. But to experience a couple trillion, flood into the space and experience some life-changing wealth, that is for a fact happening within the next 10 to 20 years. Now, not a lot of people want to hear that that's going to take 10 to 20 years, but just being really realistic here, even if it did take 10 to 20 more years, that's still not a long time. Like, it's really not, and if you don't have that patience, then honest to God, this life-changing wealth isn't necessarily for you. And that's just a fact. This life-changing wealth is only for the people that research it, that understand how massive this is going to be. And we can all put our finger on speculative dates on when this is all going to be. But I can tell you all right now, the bullish moon boys that are telling you all that it's going to be last month or this month are dead wrong. They're dead wrong. And I've shown you guys at the beginning of this call why that is, So if you're still the type of person that believes that it's going to be this month or last month or the month before that, or the entirety of this year where assets have actually been declining in value, you don't understand the short term versus the long term. And it would behoove you all to take advantage of learning the short term so you can capitalize on those opportunities and understand when it's a good time to plug your fiat dollars into this asset class, and not get manipulated into selling early or making irrational decisions. I'll play one last video clip and I'll let you guys touch on this, but both of these representatives on stage, CEO Daniel Dixon and this individual, just talk about liquidity, right? So listen to what this guy says. I played this video before, but this one is just so massive. And I can't believe that I came across this because it's coming from such a reputable organization and from someone in this reputable organization that holds such an important position, in my opinion. And it's Paul Brody from EY. Now, if you're not too familiar with who EY is, they are one of the top 4 major consulting firms in the world. Just go look up on your free time who they are and what they do. But the fact that he said this on stage in front of large CEOs, investment organizations, top banks, speaks loudly. And so for anybody to say that crypto is a scam, or for anybody to say that this asset class is dead, or that it's not going to be worth trillions upon trillions of dollars in the future, I guarantee you that you don't have more credentials than people working at EY. So I would, it would behoove you to listen to what this gentleman says and move accordingly. Again, not financial advice. So let's just listen to what he says here.
Right. And the portion that's settled in euros and yen and pounds is going to start to go up. So in particular, Mike has been, I think, a really, really positive step. It sets a benchmark. Sometimes online, you'll see like America innovates, Europe regulates. Well, regulation is important, right? The rules of the road are they're unleashing a huge amount of constructive investment activity. Now, Is it worth anything? Yes, right? This part of the conversation is called the Great Liquidity Reservoir, and I am going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion. Right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco. Right? 400 trillion. There's another 379 trillion in real estate. Right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion. Right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets, right? Not because it's
right. I'm just saying, you know, EY representative just told you how much money there is in the world, and honest to God, in my personal opinion, these numbers don't display at all. I'm just saying. But this is on screen, you know, over $500 trillion. And he just said a large portion of it's coming to crypto. I like his speculation because it's not bullish moon boyish. He's not like all of it's coming to crypto, but he said flat out a large portion of it is going to come to crypto. So you can imagine that we could possibly see at least, you know, a minimum 20, 30, 40 trillion dollars. And that is significantly higher than where we're currently sitting at today, given the fact that market's at what 1.8 trillion, right? And then the last thing, just to touch on what Mr. Aqua said about DeFi, his perspective, again, Paul Rohde, global blockchain leader at EY, he thinks that one of the things that will bring this great liquidity reservoir into crypto is going to be DeFi. So listen to what he says here, because he specifically mentions one of the things that he thinks that's going to bring, you know, this money back into the digital asset space is going to be crypto. Let's play this real fast.
Even very small stuff could end up being very large. Just think about gold, right? This is maybe the best crypto comparison. There's $13.8 trillion of gold out there in the ecosystem, right? There's another, you know, real estate, art, syndicated loans. There are lots of assets today that are not particularly liquid, that are ideal candidates for tokenization, smart contract automation, that kind of thing, right? And we've been playing around with this for a long time, but a lot of times the banks that we work with don't pull the trigger because they don't feel comfortable with the regulatory environment. That is starting to change. How quickly will it change is a different question. And again, if you know me, you know I love looking at historical precedents. And a good one for this is a shift that took place over years when public pension funds and private pension funds started to put money in stocks and bonds, right? If you go back to the 1950s, right, and fortunately we can't, but if you get data from the 1950s, you can go back and you can see that, in fact, at that time, you know, even stocks were kind of considered risky, right? If you were a proper pension fund, you had your money in bonds, probably just government bonds. Over a period of about 40 years, the entire universe changed, and so that the majority of pension fund assets today are actually in stocks, not bonds, right? And so I'm not here to argue that 40 years from now, the majority of pension fund assets will be in crypto. I think that is extremely unlikely. But I am here to argue that whatever amount is in crypto and digital assets, it's going to take 40 years. There are some pension fund managers out there who are already buying Bitcoin ETFs. They're excited about it. They want to buy digital assets. There are others who are like, no way, right? There's a pension fund in the Netherlands that's performed really well for the last few years. They have something like 15% of their assets in gold, right? But that's probably atypical these days compared to, say, the way things were 40 or 50 years ago. So it's a long cycle, but big shifts do happen over time. And in general, it's pretty typical that these shifts take 20, 30, 40 years, even if the technology and the product is available. So I think there will be a couple of knock-on effects as we go forward. And the first is that although crypto is having a great year, there's a couple of things I would expect to happen. Number one, DeFi. So DeFi is a little bit down, right? But I think it's coming back, and I'll talk a little bit about that. And then the other is
Okay, so I'll end it there. I just wanted you all to hear that we're not sitting here trying to tell you guys to get educated about DeFi because we're just like, oh, we should tell everybody about DeFi. No, these large organizations that we listen to because we're, focused on what the money's talking about. They're the ones telling you guys to get educated about DeFi. And so that is the primary reason why myself and Mr. Aqua created the Wealth 28 Club, is to educate individuals on the DeFi ecosystem, to get involved, to learn how to expand and grow your wealth through the utilization of DeFi. So that way, when all of this money does come in, imagine yourself in the future, right? 5 years from now, when we do see 10, 30, 40, whatever trillion dollars, whatever your projection is, comes in, you become a multimillionaire. Ask yourself the question, do you really think you're going to hold on to that money, that wealth that you generated in years past, by selling out of crypto and turning it back into fiat, which is devaluating at a rapid pace? No, most likely not. Do you think that putting that money into real estate and traditional investments is going to keep that wealth for you? No, it's not. You're going to need to keep up with this native digital economy that is unfolding at a rapid pace, and that is through DeFi. Learning how to get your digital assets, whether that's stable coins or cryptocurrencies, working for you to earn yield, which is, again, what these financial institutions are going to be fixated on in the future. How could you take in the future, if you do have an extra $100,000, $500,000, an extra $1 million worth of capital, and earn yield on that? It is possible through DeFi. Imagine you become a multimillionaire, 10% on $500,000. You're going to be able to do that in the future, but not if you don't know how. Now should be the time that you learn how to do that, while we're still in this pullback phase, while we're still in the early adoption phase. So that way, when you get to the point, you know how to deploy, you know where to deploy, you know what's happening behind the scenes. I'm just saying. Okay. So anyways, that's my spiel. What do you guys have to say about
All right. I do want to add to that. We're talking about real world assets here, and we're talking about DeFi. If you can just share my screen real quickly, Bailey. So here, I'm going to talk to the standpoint from the U.S. that on July 13th, 2022, the UCC, also known as the Uniform Commercial Code, had amended or implemented an amendment. And what it basically means is, so the proposed UCC amendment aims at establishing ground rules for transferring property rights in certain digital assets, notably cryptocurrencies such as Bitcoin, Ethereum, stablecoins, NFTs, and particularly setting up a regulatory framework to use such assets in collateral in security transactions. Essentially, we're talking about DeFi here. And what this means, just very quickly, you can possess that asset, but that asset isn't under your name. It's not under your name. Nothing that proves that you hold that asset or ever had that asset, because there's no digital receipt. When the UCC Uniform Commercial Code comes into effect later in 2025, there will be digital rights now that exist that says that Mr. Man, Cypress, Mr. Aquaman holds that particular asset itself. One of my guys here on the side here, Dom, he was talking about how long it takes for these assets to finally reach a particular value or even appreciate. I have another screen I want to share here. It's really quickly as well. It's just Chris Giancarlo again speaking. And then he talks about how long it had taken during the dot-com bubble. And he talks about it from that and what we're going through right now currently. So check this out.
Give me a second. Hold on. Let me add you to the stage.
Time of these things. I've often heard people say, when's it going to happen? As if we've been waiting a lifetime.
Okay.
There's a very good historical analogy. In 2000, we had something called the dot-com crash, and Time Magazine ran an article referring to an e-commerce site called pets.com, and they called it pets.bomb, and mocked the whole notion of e-commerce. The fact of the matter is, e-commerce really started coming in the late 1990s, and it did in fact crash in 2000. The time of pets.com's crash, there was about 350 million users worldwide of e-commerce. The truth is, though, that pets.com did not fail because people didn't want to buy pet supplies online. It failed because they didn't want to do it using dial-up modems. They didn't want to do it having to put their credit card information into some dodgy website, and they didn't want to wait 3 weeks for the pet supplies to arrive. It took the build out of 4G technology. It took the build out of PayPal. It took the build out of AWS delivery and same day delivery services for e-commerce to become a reality. By 2010, that 350 million users of e-commerce became 2 billion. And by 2020, as we're going into the COVID lockdown, it was close to 5 billion. Today, it's about 7 billion people today using e-commerce. So looking back, it all seems logical. We all use e-commerce now. But 20 years ago, people were questioning its very premise. Infrastructure takes time to build. The concept is often sold ahead of the infrastructure build out. But what we're talking about here with Canton is infrastructure that's ready to go and be built on today. And you're going to see this happen. The direction is set. But sometimes it does take a little bit of time.
Yeah, I like that he fixates on the infrastructure, because something that I focus on in my research is infrastructure providers like Soy Network or like Ripple. There are these organizations, these blockchain native organizations that are in the process of partnering with these large financial institutions in order to build out the infrastructure. And that infrastructure it's such a multitude of different things: custody solutions, security solutions, so on, as risk management solutions, bot trading solutions, like all of these things. It's not just one thing. It's not just like people think, oh, these financial institutions are just going to go and just buy crypto. That's not how it works. There has to be an infrastructure, a certain list of a checklist that has to be committed to in order for these financial institutions to properly onboard into this space. And that checklist, it's got like, if it's a checklist of 10 things, we're like, halfway there with that checklist. And over the next 3 to 4 years, we're going to see more of those checks come year after year. And year after year, we're going to have to deal with these short-term price fluctuations and whatnot. But looking back, zooming out, in 10 years from now, when you go on to tradingview.com and you go to the monthly view of the total cryptocurrency market cap and you zoom out, it's going to look like a hockey stick, and the people that understand that long term, you're going to be able to look back and be like, yeah, I got in down here, now we're up here. And the people that are all manipulated because of the short-term price fluctuations, and they read these bullish moonboy hopium targets that don't come into fruition, they think crypto's a scam, they sell out. You're gonna regret it. They're gonna regret it. So anyways, yeah, I feel like we hit all the nails on the head today, man. Thank you guys for tapping in. We got 1,200 listeners, so appreciate you guys for tapping in. I know that this call wasn't really so much oriented on DeFi. We touched on that briefly. We're here as individuals, influencers in this space. I don't even want to call myself an influencer. I'm a researcher. I'm an active investor, a profitable day trader. My goal, posting on the internet and pumping out content to you guys, is to show you that education is a must if you want to be successful. Most people don't want to educate themselves because they're lazy in this space, and that is what leads to them losing money. 90% of the time, when people come into the CyberX community, all we have to do is tweak their, where they're getting their information and educate them, and then they start making money. It's that simple. And so if you're the type of person that's losing right now, or is constantly down in your portfolio, you're wondering why you're not making money and you want to actually start, if you're not going to join the CyberX private community, then on your own time, I'm telling you guys right now, if you learn how to properly educate yourself, it's not hard to make money in this space. But it all starts with laying a proper foundation of education. And so we created the community. Myself and Mr. Aqua, we got the Wealth 28 Club, so you can come. You can learn about DeFi. If you want to learn about trading and investing and how we capitalize on proper market movements, we got that too. Come tap in. You'll see that everybody in the CyberX community is profiting. Everybody in the CyberX community is growing. And, we're learning, we're bouncing ideas off of each other. And we're the type of community that is going to survive long term because we're not fixated on all the bull crap that everybody else is fixated on. So what's this last thing you got to share, Mr. Man?
Yeah, I just wanted to share, briefly what we went over on, in Club 28, the private Zoom call that we host every week. And, this is one of those opportunities to take advantage of inside of DeFi. And these are the types of conversations that we're having inside of Club 28. So this is the Aqua token, the Aquarius platform, and they just had Soroban just go live their whole setup and everything looks completely different now. In the past, I was coming on here and I didn't see no APYs or, what's going to be the return on my money and yield. But now, because they have smart contracts, it gave them that capability. So just briefly looking at the this platform, I mean, it's kind of already looking like platforms that we're used to looking at as far as like having the APYs, you know, present. And, you know, take a look at this. I mean, XLM, Aqua, you know, not financial advice, of course, but you can earn 28% right now with your XLM and Aqua. And these are the, again, the conversations that we're having inside Club 28. And, you know, I gave the new instructions in the tutorial on how to operate and move and groove on this platform. So, you know, instead of tapping into Moon Boys, tapping into, you know, a lot of false narratives, you know, take your attention, you know, left instead of going right with all the masses, and start understanding something that would make you an early pioneer. And that's DeFi. DeFi is coming, like it's coming tenfold. Like I could honestly say comfortably that the future of crypto is basically going to evolve around DeFi. But yeah, this is basically, I just wanted to give this
I
little
like
sneak
that.
peek.
I like that XLM USDC pool, bro. Hold on, is that 35% right there?
Yeah, brother. Yep, USDC XLM. And again, this just went live like 3 days ago. So, you know, they have some stablecoin pools in here as well. Some of these APYs are not live yet, but 3 of them are live. I'm actually testing out this XLM and Aqua, but yeah, stablecoin pools are where it's at as well, you know.
I'll use this as an example, and I guess we'll end it here. But remember, I said a second ago, right? Let's say, for example, you do become a multimillionaire next major bull market cycle, and you have XLM, your XLM bags. Let's say you got a couple thousand in there, whatever, and you become a millionaire. Are you going to sell your XLM for fiat currency, or let's say you got 2 people? You got one person that becomes an XLM millionaire, right? And I'm just using as an example. Don't quote that for financial advice or anything. I'm not saying that that's going to happen, but let's say you got one person becomes an XLM millionaire, sells all their XLM for, you know, cash, and goes and buys real estate. God bless their soul. Then you got the other person that becomes an XLM millionaire, holds on to all their XLM, and goes and deploys that XLM that's now worth dollars instead of cents onto DeFi ecosystems, and they're earning, let's say they take $100,000 of their profits from the next bull market cycle, and they put $100,000 in XLM USDC, you're now earning $35,000 a year. 35%, do the math on 100%, on $100,000 is 35 grand. So like, you see the power of DeFi, okay? Now imagine that if you have $500,000 after the next bull market cycle to plug into XLM USDC, right? The person that sells out into the traditional system, fiat, or goes and puts their money in real estate, or tries to open up a business in the traditional, you know, investment landscape, whatever, they're going to lose out. The person that understands how to leverage DeFi and maximize their bull market profits to earn more yield and earn more digital assets in this digitally native economy that we're transitioning into is going to survive long term. Not the person, I'm telling you guys right now, that sells out into fiat. Oh man,
Facts.
Oh, I want to add to that. As a real estate investor, like, real estate's always my first passion, my first love, and real estate is also being tokenized too. And just recently, I've been chatting with Lofty AI, built on the Algorand blockchain. We've been chatting behind the scenes, and they operate real estate platform, like a DeFi platform essentially, where you can set orders, limit orders. So I set a limit order for a commercial property I was very interested in. The market dropped into my position. Now I'm an owner of a property in New Mexico, a fractional owner, just because I was able to capitalize on DeFi for real estate though too. So I don't have to go there and do any of the heavy lifting for the property, which I'm used to doing. Now I just own a fractional portion of it, and I get paid daily on that on the platform as well. So there's multiple ways that you can go about DeFi, but essentially Aquaman and Cypress are 100% spot on that DeFi is the future. Not even the future, DeFi is there right now, and if you can tap into it right now, you'll be set for when the future arrives.
It's going to be weird in the future if you're not involved in DeFi. Like, in the future, the traditional way of investing, it's not going to be dead. But remember, I was talking about larger investors always in search of higher yield. I've shown you guys in previous video breakdowns that these larger investors, they know that they could be earning 30% on their cash right now. The reason why they're not is because of the lack of regulatory clarity. we as retail investors don't have the same regulatory requirements that these financial institutions do. And so we could take advantage of these. Again, mitigate your risk, understand your risk parameters, and understand how much money you're willing to expose yourself with. But it's possible. And you first, again, you can't just jump in and just expect to get wealthy. You have to educate yourself, which is why we're here trying to educate people. We're trying to show you all that if you tap into the right information, the right feed of information, i.e. the information that we provide not only at the CyberX community, but Mr. Man presents hundreds of fundamental documents, hundreds of video clips on his Twitter space and his YouTube. Same thing with Mr. Aqua. Like if you guys pay attention, you know, there are some really good researchers out there. Really good researchers out there. Stop paying attention to these moon boys. That shit is so dead. That, like, if you're still listening to moon boys, that's like 2019, 20, 21. Like, you're living in that era, you know? You got to move on. You got to move with the tide. You're still fixated on all these, like, oh, you know, bullish moon boy target. That's like, that's dead. That's coming. Don't get me wrong. That's coming. But what can you do now so that way you can position yourself to really thrive these next couple of market cycles? You know, and that revolves around growing your wealth now, building more bags of these digital assets that are, you know, laying out the foundation for what's set to come. That's my perspective.
That's real. You know, I got one last thing to share for everyone that's paying attention. But you know, Ripple and the team, they've been over at the XRPL Korea, I believe, right? Is it Korea? And yeah, I've been waiting for this to patiently come out, and I came across this on Twitter. It's like a snippet of Brad Garlinghouse and Monica Long on stage. I'm waiting for the actual Ripple page to put out their videos of it, so it may be a little tough to hear, but let's just tap in and listen to what Monica Long was talking about. Again, talking about institutional DeFi, and like the writing is so clear on the wall and what these guys are wanting to do. So yeah, let's just tap in and listen to what she had to say.
Monica, back over to you. We've been traveling around the region recently, and it's one of the fun things is we've been able to share a lot of new, exciting news. You know, one of those announcements was around our Futureverse partnership related to custody. But, you know, custody is a relatively new entrant in the lineup for Ripple, if you will. So maybe interesting for the audience to hear a little bit about our journey. You know, so we're having stablecoins, Futureverse, you know, kind of highlight the custody. How do we get there, and what sort of that progression?
Yeah. You know, through our payments business, we had to solve a lot of problems to bring the benefits of doing payments on chain, which we all know is about speed, transparency, cost efficiency. Bring those benefits to regulated institutions in a way that was seamless. So I think something many of us in the industry may underestimate is just the challenge of integrating blockchains with traditional systems, so payment systems. So that's been a long-standing priority of ours, and over time we have built payout capabilities into more than 80 markets. We've also had to create and solve for creating liquidity across different fiat currencies as well as digital assets. And so that also as an operation is something that, you know, those two things together we think are some things that financial institutions can use not just for payments but for other use cases in the future. So that's kind of what sprouted this vision for Ripple to really become this end-to-end digital asset infrastructure provider for financial services to come to blockchain.
Did you say something?
Bro, yeah, she just said it. She just said that Ripple's an infrastructure provider. What did I say a second ago? This, like, hold on, let me just prove my case. What did I say a second ago? We are putting out information that you should be paying attention to. I said Ripple, Hedera, XCC Network, Stellar Blockchain, they're infrastructure providers. They're building out the infrastructure for these financial institutions to drag and drop the old system over to the new one. And this is exactly what she's talking about. How do you think I learned that? By tapping into this type of info that nobody else is paying attention to. Easy, man.
That's facts, brother. Yeah, she says that, you know, they want to be the best in class financial for finance. So I mean, and these institutions, they want to earn yield. So like that's what DeFi is all about. So yeah, definitely, you know, this is just more proof in the pudding that DeFi is the future for the average Joe investors and for institutions too. So, but yeah, I'm waiting for the legit ones to come out on the Ripple page. I'll be touching on them. I'm sure there's going to be other videos of Brad Garlinghouse and David Schwartz as well. So I'm looking forward to that. So I'm pretty sure we'll be, you know, clipping these out in future podcasts. So
100%. I love how this is all too early. Like the AMM feature on the XRPL just dropped in March. We've been at the forefront, dude. It's just starting to cook up. Like next 2, 3, 4, 5 years, the TVL that's going to be locked on the XRPL is going to be unimaginable from a DeFi perspective. You know, even if I've mentioned this before, even if XRP isn't utilized for cross-border payments, just the DeFi capabilities on the XRPL alone and all of the partnerships that Ripple has and the interest from an institutional perspective to utilize the DeFi ecosystem to earn yield, that alone within itself is going to create a massive sense of demand for the digital asset XRP, you know, much more so than what there is today for it, in my personal opinion. So anyways, yeah, man, thank you guys for tapping in today. Everybody else, thank you all so much for tapping in. Really do appreciate the love and the support. Make sure you guys go follow these two gentlemen on Twitter and on YouTube if you don't follow them already. Anybody that's interested in any of the services that we provide, especially the DeFi Wealth 28 Club, learning about DeFi, even if you don't want to go and deploy your digital assets and you just want to learn about it, come learn, come educate yourself. There's nothing wrong with tapping into education, going through a course to just familiarize yourself with what's happening. Head over to cyberxtrading.com. We'd love to have you ask questions, tap in. We host Zoom calls all throughout the week. Like Mr. Aqua said yesterday, he hosted a bomb Zoom call talking about the Stellar ecosystem and whatnot. Every single week, I'm dropping fundamental breakdowns, going over PDFs, going over documents, going over current market environment, you know, really just educating our community members. Same thing with Mr. Man. He's got his own community out there. Go follow him on Twitter. Make sure you're tapping into his Patreon and you know, giving support. Always just trying to educate you guys. Blessings to you all. Really do appreciate it. With that being said, I think we'll cut it there, man. Everybody take it easy.
much love, everybody.
Take it easy.